Hello everyone, welcome back to All Financial Discussion channel. For this video, I'm going to do a deep detailed discussion on the three investment strategies. For example, if you have decided to use DCA, dollar cost averaging, I will discuss in deep detail what you're supposed to do next. Typically, when people actually choose DCA, they are actually a new investor or they do not want to do so much in terms of the investment. Next will be buying the dips. Okay, so basically this is actually for proven investor. So they need to know some market situation in order to invest in this kinds of situation, buy the dips. And last but not least, my preferred method is actually a hybrid, which means that a combination of DCA and also buy the dips. Okay, so basically this video, I will discuss all these three methods, which are a proven methods in order to have a successful investment. Before I continue, guys, okay, please help me by like this video. Give me a few seconds. Help me press the like button now. Please also encourage me by subscribing to this channel and turn on your notification bell. Once again, thank you so much for strong support. Let's start the discussion by discussing step-by-step execution of dollar cost averaging so that you can be like a pro. So firstly, you need to choose your type of investment. Like I mentioned earlier on, for people that actually choose DCA, typically they are a new so-called investor or they do not want to do so much in terms of investment. This is typically for long-term investment. So hence, okay, I would suggest that probably you can select one of the ETF and maybe in more detail will be the S&P 500. Okay, since this is actually quite a tradition and safe bet when you actually invest. If you really think that you want to invest into one single stock, probably you need to consider to select the blue chip stock. Again, as I mentioned that for people that choose DCA, typically is for long-term investment. So hence, I think blue chip stocks definitely will fit the bill for a long-term investment. Next, okay, on crypto. Okay, so crypto is known to be a very volatile market. So therefore, in order to fulfill this DCA, I will strongly urge either BTC or ETH, Bitcoin or Ethereum only. Okay, the rest, I feel that it is too difficult to do in terms of DCA for a long-term investment and also for somebody that is new in terms of investment. So after this, you probably need to set a fixed schedule. Okay, so don't overcommit. Make sure you are able to commit into this fixed schedule. The investment can be in a weekly or every 2 weeks you invest one time or monthly. Okay, so for example, you can invest like $500 on the very first day of the month. Okay, but for myself, I strongly urge that instead of 500 every month, you probably can consider every $100 in a weekly manner. As I mentioned that when we actually do DCA is actually to average up. So therefore, why choose monthly? Okay, why don't consider to choose weekly so that the DCA is even more average up? So therefore, when you actually apply this DCA, as far as I recommend, I strongly urge you to choose the weekly type so that you can average up the difference. Next, okay, as I mentioned also, okay, we want to do this in term of long term. You do not want to do so much work when you actually choose this DCA. So therefore, we need to find a way how to automate it. Okay, so basically, several brokerage auto investment. Okay, for example, Vanguard, Fidelity, or Coinbase for crypto, they actually can do some form of automate investment. Last but not least, please remember that you need to stay disciplined. Okay, so you should not skip. So therefore, as I mentioned earlier on, don't overcommit. Okay, so therefore, if you commit weekly, make sure the amount you are able to commit in a weekly basis, like for example, $100 weekly rather than suddenly $500 per week. So make sure that you can gradually increase this amount, but definitely you need to be disciplined. So there should not be any chances that you actually has the consideration to skip every week for the investment or maybe also doubling down. So in short, the consistent is actually the key. When DCA will be the best? Okay, under the situation of bull markets. Okay, so this actually prevent us from overpaying at peaks. Okay, because bull market is considered a good market, so probably the the price may be all-time high. So therefore, when we actually do DCA, we actually prevent us to overpay at a very high all-time cost. Okay, so therefore, okay, DCA is probably more useful when under this bull market. Under this bear market, DCA can be also very useful, okay, because they actually average down your cost basis. Okay, as I mentioned earlier on, under the bear market, the cost may go down and down and down without you guys knowing. So therefore, when we actually do this DCA, we actually can have some form of average, and this will actually indirectly reduce our risk also. Under this volatility market, which means that there is a sudden swing. Okay, so basically, even there's a swing, okay, DCA also should be more suitable as compared to the rest. So basically, this is under the DCA. Give you some simple example. For example, okay, if we want to invest $1,000 per month, okay, into one of the S&P 500 SPY, okay, so over the 5 years, you actually all buy at maybe all different prices, and this will definitely lower the risk. What will be the weakness for DCA? For example, okay, if the market actually rally non-stop, okay, which means that they keep on increase and increase. For example, in the 2021 bull run, okay, so basically we might have gained more if we actually invest in a lump sum, okay, which means that at one time we just invest all our amount, okay, because this is a bull run, so therefore we will benefit more rather than DCA. Okay, so probably this is the only weakness on DCA. Next, how to buy the dips successfully. Okay, so again, let me go through the step-by-step execution here. Firstly, we need to define what is actually a dip. Is 5% drop is good enough? 10% or 20%? Okay, so you must be disciplined. Firstly, you must do enough homework to decide how much then we can declare that is actually a dip. Okay, so once we have the rules, okay, we need to keep the cash reserve. Okay, so keep discipline. Okay, so don't one time that you go all in. Okay, because the dips can be happening many times. So if you go all in suddenly, then you will not have any capital to invest anymore. So therefore, you need to scale this in a gradually manner. So basically, we need to do some form of technical fundamental signal. As I mentioned earlier on, when we actually choose to buy the dips, this is for someone that actually understand the market situation. So you probably need to do some technical or some fundamental signal in order to identify the dips. So basically, when we actually mention that this RSI, okay, which is less than 30, probably it will be under this oversold. And if you are in the investment, you definitely understand what is called a fear and greed index. So under this extreme fear and also extreme greed, okay, so basically these are some of the technical signals that can tell you, okay, whether you should buy or you should sell. So normally, okay, we always say this buy low, which means that under extreme fear is considered buy low. And then once we reach this extreme greed, okay, which is to sell high, so this is how we can generate profit. Basically, based on some strong fundamental, okay, so basically you need to choose some stock that is actually cheap when we actually compare to the earning. Okay, so you must have some so-called strong understanding in the market situation, then you will be able to execute this buy the dip successfully. So most important is avoid catching the falling knife, okay, which means that the price go down and down rapidly. Okay, so we probably very worried when you actually try to catch a falling knife. So basically, we need to wait for confirmation. Okay, for example, we can wait for a little bounce. Okay, so after 2 or 3 days, they probably will have a little bounce. So after that, then we actually do the buy the dips. Okay, so basically, this is the information on buy the dips. Okay, so when we actually buy the dips, actually work best. Okay, for example, under the bear market here. Okay, so under the big discount, for example, the COVID crash 2022 crypto winter here. So basically, there will be a strong dip. And if you buy the dip, and then when it actually recover, then you will probably have some so-called discount on the price that you actually buy. So in terms of the overreaction, okay, when the strong stocks actually unfairly sold off, okay, for example, the Meta in 2022, they actually has a severe drop. So basically, if we are able to identify the dip, then we will probably have some form of profit. Okay, so these are some of the example as I mentioned earlier on. For example, in the March 2020, okay, under the COVID crash, Okay, so SPY dropped about 35%. After that, they actually rebound. So if you are able to identify the dip, then you will have some form of so-called profit. It may not be able to identify the lowest point, but as long as you take this generic expression of buying the dips, whether is it 5%, 10%, or 20%, then you will be able to have some form of substantial profit here. So basically, this is what it means. So whether we are going to buy at 20% to 30%, okay, would have been a huge win. Okay, basically, this is when we actually do the buy the dips. Okay, so what will be the weakness when we actually buy the dips? Okay, so if the dips keep dropping, okay, for example, the 2008 financial crisis, you probably will lose your money while you're actually waiting for it to recover. Okay, so basically, this is the downside when you actually execute the buy the dips, so-called investment strategize. Next, this is what I strongly urge you to practice. You need to do some homework. Okay, so basically, this is what I will be doing. So basically, this is what we call the hybrid strategize. Basically, a combination of DCA plus the deep buying. Okay, so basically, this will be the best of both worlds, as I mentioned early on. Okay, firstly, okay, so as I mentioned early on my previous video discussion, okay, I will not go all in into DCA. I probably will go only 80% into the DCA. The rest of the 20%, okay, I will train myself up to identify the dips. Okay, for example, if let's say they are going to have a huge dips, then I will take this opportunity to buy, let's say, my another 10% into the market. If the bids further drop, then I will have another 10% to buy the dips. Okay, so basically, this is what I mean by hybrid. Okay, so basically, hybrid actually combine the DCA plus the deep buying. So one of the clear example is, for example, okay, as I give you some illustration, if let's say I'm plan to invest, okay, $1,000 every month, so $800 will go into DCA. Okay, so I identified the share, the S&P 500 or crypto. I identify it, and basically every month I will put 800 per month. Okay, so as I mentioned, it can be even per week, which means that $200 per week. Okay, so basically this fund will invest automatically inside. So I actually will keep aside this $200, and basically I will look up for any potentially dips. Okay, if there is a dip, okay, for example, let's say this SPY actually dropped 5%, then I will deploy half, okay, which is the $100 inside here. Then if it still further drop another 10%, then I will deploy the rest. Okay, so basically this is how the hybrid actually work. Okay, why this work? Okay, firstly, okay, you are going to have definitely lesser stress as compared to buy the dips, because buy the dip you need to continue monitor the situation. So therefore, this is actually less stressful because you actually also doing some form of investment. Instead of $1,000, maybe $800 per month actually go into the investment. So therefore, this is actually less stressful as compared to the full market timing, okay, which is buying the dips. Okay, so this also potentially take the advantages of any major discount. Like I mentioned earlier on, any potential dips that you actually identify, then you buy in, then this work the best. Okay, so basically this is why I strongly suggest you guys to use this method, hybrid combination of DCA and buy the dips opportunity here. Let me do a quick conclusion here. Okay, so basically, this is a very simple conclusion based on DCA versus the deep buying. Okay, so basically, DCA win, okay, when the price is actually so-called sideways, okay, which means that there's no major increase or major drop, okay, or maybe also in terms of the outward market, okay, which means that the price also increase. So this you actually prefer to buy in terms of DCA. Deep buying is actually will be more beneficial. For example, there will be a crash, and then you probably also risk some missing rally here. So basically, if you have some form of crash, okay, then you actually will miss it if let's say this thing continue to rally on and on. Okay, so let me give you a real scenario. Okay, for example, during the COVID 2020, okay, so basically the market crash. Okay, so under this DCA, if you keep on buying, then you will have a 50% gain. Okay, but for deep buying pattern here, you can see from here, because the dip is actually quite obvious, and if you really bought at the bottom, then you will probably have some 40% gain. Okay, but like I mentioned earlier on, probably a lot of people may not be able to get this 40% in full because it is almost very difficult to identify the lowest point. Okay, but over here you can see that this is actually quite attractive. For example, like I did just now, I actually do two times. Then I may have, let's say, 10, 10 and 20% so-called profit over here. Okay, for another scenario here, it's basically on the 2022 bear market. Okay, if you do this DCA, the return will be 10%. However, if you do this deep buying, then you will probably have only 5% or minus 5% here. Okay, so basically you can see the contra between the bear market. And then last but not least, when the thing actually rally, okay, under this 2023, the price actually rally. And basically when we actually do this DCA, then we will have a 20% consistency. Okay, however, okay, if you use this deep buying for rally, okay, you actually miss the early gain, okay, because you can't identify the dips. And once you cannot identify the dips, then you may have issue. You probably will miss all the early gain. So basically with this, I think you will be able to understand, okay, when you actually so-called execute the DCA method or buy the dip method, or maybe my preferred method, which is the hybrid, a combination of DCA and buy the dips. Okay, with this, I'd like to end my discussion. Please help to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.